Good morning, everyone, and thanks for joining on this third session of Niveshako Samvaad. I'm Amit Manjrekar from Aditya Birla Sun Life Asset Management. Welcomes you all. Niveshako Samvaad. So, I think though it sounds desi, but Niveshak, it doesn't mean only the investor, and the Samvaad, that has been the conversation within we and us. So we have started this new initiative. So this is the third session. This basically this initiative is based on the value addition, that what are the trends going on in the market, how as Aditya Birla Sun Life AMC we can add value to you as an investor and as a manufacturer. So idea of this event is this is going to be a knowledge oriented session. So today's session, which is based on the cryptos, today's world is, that's the talk of the town. From tweeters to the parliaments, you go to, I think any news channel, I think 20-30% of the business news which are related to the crypto. So as this is going to be a knowledge oriented session, we have none other than Mr. Gautam Chugani, who is the senior analyst at the Bernstein covering crypto strategy. So Mr. Gautam joined Bernstein in 2015 from CDC Group, a private equity firm in London, where he was director focused on financial services investments. He also worked in venture capital at Matrix Partners, leading investments in financial services and fintech. Prior to his work in private equity, Gautam spent 4 years at McKinsey, covering the entire spectrum of financial services with projects at banks, NBFC, insurance companies, asset mergers, and payment platforms. After starting his career in auditing and the investment banking, Mr. Gautam holds a BA from Narsi Monji College at Commerce and Economics, India, and postgraduate degree in management from the Indian School of Business, and he's also a chartered accountant. So Gautam, first of all, welcome to this platform.
Thanks, Amit, for hosting me.
Yeah, so thank you so much for joining. And as I said, I think this platform, we have started this new initiative. There is overwhelming response. Participants, if you see the number, this is the most event where, I think number of participants, it's really zooming. And registrations, which is over 950. So over to you, and let's take everyone through this journey, and let's clear the concepts. So over to you, Gautam.
Great. Let's put up the slides, and then we can get started. So great. Thank you, everyone. Thanks for joining. I started my crypto journey back in 2017, kind of like how everyone starts, starting to kind of, look at some of these tokens and seeing what's happening. And, obviously Bitcoin and Ethereum were the most prominent ones back then, but a long list of new tokens were starting back in 2017. And to me, I come from a fintech venture capital background. It definitely sounded like, the first thing that I think I've fought against or sort of imagined is that that actually this is not cryptocurrency. This is not about a currency. This is more about a technology. And the technology is about how do we change and, refine or sort of redefine the internet in terms of how we can actually redefine the internet business models. So this is nothing but an enabling technology to actually change the way we build internet business models. I think participants are complaining about some sound. Amit, can you confirm if you can hear fine?
Yes, I can hear you perfectly.
Okay, great. Yeah. So, and the slides are also a bit, I think something with the settings because I can't see the slides properly. Yeah, so I think the more important point here is that the biggest misnomer that anyone makes about crypto is the fact that everyone starts calling it a currency. And when you start examining this closely, you would realize that actually this is not a currency. This is maybe Bitcoin was started with some semi-intention of making it a kind of like money, but everything after that has been actually more about building a new way of enabling technology, and bringing sort of more inclusiveness in the global innovation space. And as we talk about this, you'll realize what I mean. So, let's start with the basics, and maybe let's start with Bitcoin, Ethereum, and one new sector, which is called DeFi, which is called decentralized finance. This will get a bit technical. I will try and keep it sort of fairly high level. But if you have any questions, you can leave it in the in the Q&A box. So let's go on to Bitcoin. Yeah, so this is interesting, right? If you see this, and again, my objective here is to break a lot of notions that you see in headlines, right? Headlines are usually, there's a lot of volatility. There's a lot of Bitcoin is a terrible source of investment, or crypto has been a terrible source of investment. I want to declare this to you. This has been the single largest asset class created in the shortest amount of time. And that has happened essentially with, that has essentially happened when you kind of look at it from, if you look at, how crypto was, which started in 2012, 13, and there was obviously this first bull market, you would realize that this has essentially become a sort of a $3 trillion asset class. No other asset class has been created in that sort of short period of time. And when you kind of look at even what was called the crypto bear market, or crypto bull market in 2017, 18, you would realize that from where we are today, that looks like a minor blip. And you see this very quiet period here. If you look at Jan 2018, which is where the previous bull market peaked, and you see this very sort of flattish period. Now that looks like nothing was happening, but actually that's the period where the most things have happened. So this bull market that you see today is nothing but the outcome of that flat period, where a lot of innovators, a lot of founders, a lot of entrepreneurs in the crypto space were actually building and building a very interesting new innovative technologies, and that obviously has led to this value creation that's happened over the last few years. Another interesting way to kind of look at the bear market, or look at the crypto market, is also the fact that you should think of this as startups. And if startups were actually listed as tokens, that's exactly how these tokens behave. So when I say value created, this is value created of all the startups that have been created in the crypto market. And then obviously the journey is volatile. It kind of goes up and down depending on sentiment, regulation, government policy, so on and so forth. But over long periods of time, this is the total market cap created of all startups who had tokens and the value of those tokens, right? And you'll obviously ask, how are the tokens valued and so on and so forth. But I think that mindset and that thought process is very important if you genuinely want to learn about crypto. Otherwise, you look at this as tokens and you'll see them sort of, kind of going crazy and volatile and so on and so forth, and you'll never understand what's happening. So you should think of this as startups and think of this as investing in startups. Now, obviously, you can invest in bad startups and good startups, and all those kind of interesting things can happen. But if you learn how to invest in good startups, just like how venture capital makes money, this allows all retail investors to participate in a venture capital like opportunity in the form of tokens. So that's again one of the interesting mindsets to have when you kind of look at the space, and stay away from the mainstream media headlines and so on and so forth, because that leads to a lot of misalignments. So going on to Bitcoin, if you look at sort of what is Bitcoin essentially, right? I mean, the very basic concept of Bitcoin is, you should first think of it like a bank ledger, right? And a bank ledger is nothing but which maintains an account of how much money every account holds, right? Which is what your, in the old days, your passbook did. And then in the current times, your bank statement, which you can download from your mobile banking app, can do. But one of the biggest characteristics or the traits of that ledger, or that that khata, as you would see, is the fact that that's actually controlled by one single party. So it's controlled by your bank. Somebody is kind of maintaining the account in terms of Somebody's kind of maintaining the account in terms of like, debiting and crediting the entries. But now if that ledger, not, or that single, bank account ledger was not maintained by one single party or not maintained by one single entity, but maintained by a group of, what are called as sort of validators or bookkeepers, or a group of individuals or entities across the world, not, and not knowing each other. So, you can always have parties which know each other and maintain the ledger, but none of these parties know each other. None of these entities know each other, but they all come to one single consensus about the sort of the value of the ledger. And that essentially is the core Bitcoin technology, which is how do you arrive at that value of that ledger without, one single party controlling it, not controlled by the government, not controlled by the bank, Central Bank of India, not controlled by any central bank across the world, and not controlled by any of the sort of commercial banking entities. That essentially is Bitcoin. Now, obviously, there are a lot of technical aspects around this, but one of the very simple ideas here is Bitcoin achieves this using what is called a proof of work technology, or proof of work methodology. Now, what is proof of work? Proof of work is essentially where the miners, and you could think of these miners as, these decentralized bookkeepers. And you should think of these as businesses which kind of contribute to Bitcoin network. They run kind of an computing or a validation, process or an operation, which is, kind of is like a bookkeeping function, or what is in normal parlance called like a validating function, or in very simple parlance, in the Bitcoin parlance, they are essentially called miners. And miners like show commitment to the Bitcoin network by, contributing electricity or computing power. And that computing power essentially solves a mathematical equation which allows one of them probabilistically to validate the Bitcoin ledger. So let's say there are 100 miners. One of them will end up solving the equation first by throwing computational power at it, or throwing electricity at it, which is like running computing machines. And then one of them will validate the ledger and say, okay, this is the final form of the ledger. And they show commitment and they show honesty towards the ledger by actually investing, right? And investment is coming in the form of computational power and electricity. And when one of them validates it, they let the other sort of 99 miners, for example, know that, oh, this is the final form of the ledger, that, this entries were passed and this was debited, this was credited. And as a result of that, 100 miners come to the same consensus about the ledger. Now, why is this powerful, right? There was no technology in the past before the blockchain technology where 100 unknown people could come to the same consensus about the value of the ledger. And the value of the ledger here is essentially saying, how much anyone owns in terms of who owns how much Bitcoin. If one person transfers Bitcoin to the other, all of that gets validated. And then you would ask, what is a block, right? A block is nothing but like a group of transactions. So let's say there are a few transactions or 10 transactions that happen. Those 10 transactions are kind of batched together in the form of what is called a block or a group of transactions. And every 10 minutes, a group of transactions gets validated into the ledger. That means the ledger gets updated every 10 minutes. So that's essentially called, what is kind of arrives at a consensus every 10 minutes. And for providing that service, right? And for providing that service, new Bitcoin comes into existence. And that's what is called the Bitcoin monetary policy, which is, just like how central banks or RBI has a monetary policy, Bitcoin algorithm has its own monetary policy. And the result of that is that there will always be 21 million Bitcoins. That monetary policy is hard-coded in the program logic. So in a way, actually, Bitcoin is like an algorithmic, coin, which has consensus mechanisms, which has its own validation mechanism, and a group of community of unknown validators and whoever runs the Bitcoin software can come together and do that. And that's been the core innovation of Bitcoin. Now, obviously, because there are 21 million Bitcoins, and over a period of time, as more and more people have demanded Bitcoin, this combination of, you kind of move on to the next slide, this combination of fixed supply when it meets growing demand has resulted in this, crazy return that you've seen on Bitcoin, because, clearly, if there are 21 million Bitcoins, there are more than 21 million millionaires in this world. Or there are, so not even a single millionaire in the world can't even get one Bitcoin if that was true. And obviously, this has been a lot of retail demand and so on and so forth. Its demand has come from fintech players like Square and PayPal, who are offering this to retail. It's come from institutional investors now, macro hedge fund managers. It's come from corporate treasuries. Tesla owns Bitcoin on its balance sheet. Square, which is one of the largest payments company in the world, owns Bitcoin on its balance sheet. And so, as more and more people think of this as a way of just like you would invest in gold, or versus this would be a digital gold, the demand for Bitcoin increases. And when that meets inelastic supply, and what I mean by inelastic supply here is like a fixed supply of 21 billion Bitcoins, you see this asymmetry, right? You see this mismatch where the price would always go up. And obviously there are times where there is more supply. I mean, people are trying to book profit, or somebody like miners who are getting rewarded, they're trying to sell the mining, their Bitcoin so that they can recover their costs or make profit. So there are obviously volatile periods. So my broad advice on Bitcoin is that this is a long-term investment, just like everyone tells you stocks and mutual funds are long-term investment. And the volatility that you see here with the stock market is maybe accentuated, or kind of the volatility is much higher here versus your regular stocks, but obviously that's reflected in the return, right? So the volatility to return perspective is very, very kind of it's the risk reward is very different here versus what you see with stocks and mutual funds. So over long periods of time, if anyone has held Bitcoin, they've never lost money. And long period, I mean 3 to 5 years. But if you've held it obviously over the next 6 months and you expect return, I don't think that's going to happen. Especially when you buy it in the bull market, when everybody's kind of wanting to buy it, right? And that is a challenge. So buying dips and buying at points in time and holding it for a long period is the safest way to kind of participate in Bitcoin. Let's go on to Ethereum. I'll keep it sort of fairly simple and high level. So obviously this interest that I showed, right, in terms of different participants, right, just previously. So this interest that you see, right, if you look at the trading volumes or the spot trading volumes for leading crypto exchanges, I mean, these have just expanded, right? This interest from, Jan 18, which was the previous bull market, to today is an order of multiple, right? We've never seen this kind of trading volume, right, in trillions almost. And that has essentially happened because, there's been tremendous institutional interest and there's been tremendous global interest. This interest is obviously then reflected in the prices and so on and so forth. Let's go to Ethereum. So going to the Ethereum, when it comes to Ethereum, Ethereum is anything but Bitcoin, right? It's not. So, a lot of people ask these questions. Oh, if it's Bitcoin, then why do you need so many coins? And why do you need 1,000 coins? Now, as soon as you leave Bitcoin, right, you leave this point around money and supply and demand, you start entering in this new world of technology. And this new world of technology is very interesting because usually any entrepreneur, any founder, right, any tech founder, when it launches, when it kind of, they launch their startup, in many countries, especially if it's a financial startup, you have to go through regulators, right? You have to say, hey, I want to launch this, and the regulator will approve you, and so on and so forth. And if you're like an 18-year-old person or a 19-year-old person who knows how to code, like, how to write a software program, you can't launch because, the regulator will say, oh, you're too young to even do something. But let's say they have ideas, right? And they're innovative people and they want to kind of, code up software and launch on a global platform and not be dependent on, existing banking rails or payment rails like, UPIs, for example, in India. Or let's say you want to build a Paytm, right? But for the world, not for India. And so you'll have to go through many sort of, layers of regulators and, multiple partnerships and so on and so forth. So it's a lot of permission, right? Or just like you need to seek permission, you need to seek approvals. But if there was a system which was permissionless, which allowed any founder, any entrepreneur in the world, whether you come from Nigeria, India, West, East, doesn't matter. And it also doesn't matter whether you have qualifications, whether you are educated, whether you went to IIT, IIM, or any of the top institutes in the world. But you know one thing, and you know coding. You could go onto the Ethereum network and start coding up a software. and start coding them. So Ethereum is nothing but like a decentralized computer. It's a global decentralized computer. And just like I explained, like Bitcoin is a ledger which just records how much Bitcoin everyone owns. This ledger or this blockchain is essentially storing software programs. It's essentially storing programs, storing logic, and it is storing and every time that state of that software or state of the program changes, that is essentially recorded onto the that is essentially recorded onto the software or onto the blockchain ledger. And that is essentially Ethereum. Ethereum is a decentralized computer which allows anyone in the world, irrespective of age, qualification, race, culture, but has ideas, knows the program and knows the software, knows how to code, to actually launch. So what has Ethereum launched? So Ethereum has launched many things, right? So Ethereum is just a platform, it's a network, and there are many businesses and startups, like I say, have been launched with Ethereum. So one of the first set of startups that has been launched on Ethereum has been in the space of finance, which is decentralized finance. So this whole idea of what is DeFi, and when you read articles and so on and so forth, you'll see this word called DeFi. This DeFi is essentially like a group of decentralized financial applications. That's what DeFi means. And what are those DeFi applications? So I'll give you some simple examples. You can actually launch an exchange or a brokerage. So you see WazirX, you see Binance. You can essentially launch a Binance-like exchange coded up on Ethereum. So there are exchanges on Ethereum. You can also write financial contracts, so derivatives, futures, options, lending, right? So let's say you have Ethereum and you want to borrow against that Ethereum. That means you have $100 of Ethereum, and against $100 you want to borrow $60, at some loan to value. There are platforms on Ethereum where you can take your Ethereum, deposit it in a contract which is called a smart contract, and borrow $60 within just a few seconds, within 10 seconds. So this lending technology where anyone can borrow against their collateral or against their crypto is actually built on Ethereum. So this is the, as I said, there are many startups or there are many sort of platforms and teams which are actually providing this platform. Now, what is so powerful about, being able to borrow against your crypto? What is powerful is that this is all handled by what is called smart contracts, or there is absolutely no, there is absolutely limited human intervention. So once someone has actually contracted it or somebody has actually built it, there is no human intervention. Nobody is looking at your file, reviewing your background history. All they're seeing is if you have $100 of Ethereum, you're eligible for $60 of, USD, US dollar as a loan, and that gets automatically approved. Let's say the value of Ethereum goes down by 20%, 30%, 40%. And suppose you, against $100, you borrowed $60. When the value of Ethereum goes down by 40%, it automatically liquidates your collateral, right? So there is, again, no human intervention. Just like, gold finance company liquidates the collateral, but obviously it does it manually. This is all handled, right? So if robos were running a bank, you could essentially build a bank on Ethereum without any kind of physical intervention, just based on smart contract rules and codes, which are essentially transparent to everyone. So the person who's using the bank knows what the code is, knows what the rules are. And the person who's obviously built it, has kind of built it for the people. And that is essentially the power of Ethereum. And now, obviously, you can reverse this, right? Instead of borrowing, you want to lend. That means when you deposit money in a bank, you earn interest rate. In this case, you could also take your Ethereum or your Bitcoin or any other kind of crypto and actually lend, and you could earn interest rate on it, and you could earn interest rate in US dollar terms. It could be 4%, 5%, depending on the market. So there are obviously money markets being run on Ethereum. So Ethereum should be seen, this whole decentralized finance space is almost like running a commercial banking or a Wall Street on Ethereum, right? We are essentially building the entire Wall Street, Main Street infrastructure on Ethereum. And that's the power of Ethereum. So the value of Ethereum comes from all the businesses and all the kind of interesting financial applications that are built on it. But that's not the only thing, right? So all the new tokens you see, right, which are, where, you're investing in these tokens, all these tokens are essentially, launched on Ethereum. They're essentially, smart contracts are based on Ethereum contracts. And that's essentially become one of the core business drivers of Ethereum and one of the value drivers. So Ethereum is nothing but a global software platform, which allows anyone to build anything and so on and so forth. Yeah, so I talked about smart contracts, essentially contracts which, without human intervention are able to execute system logic, rules, and build applications. Decentralized apps, these are essentially financial applications which are open source and built on the blockchain. And then obviously, as every application has its own token, right? So when you see thousands and thousands of tokens, these are applications, all these startups having their own tokens, right? Which are essentially called dApps or decentralized applications. Just like you have apps on your mobile phone, like in your Play Store and your Apple Store, you have apps on Ethereum, right? And each app has its own token. And those tokens are used for different things like incentivizing you, providing and when you participate in many of these tokens, right, you also get access in some cases to the revenue of those. So when you invest in, so you're also a user of the app, you're also an investor in the app, and you're also the one who's kind of, participate in these platforms using these tokens and so on and so forth. So this whole financial space, right, DeFi space, what I was calling it, has now almost more than $100 billion of liquidity. And all this has happened in the last 18 months. So, obviously with COVID, technological adoption inflected, things could have happened after 5 years, have happened in the last 2 years. And the same thing has happened with crypto also, where this whole of this financial application that we built, which was deposits, lending, exchanges, brokerage, all of these platforms on Ethereum saw massive adoption and usage, right? And that has essentially resulted in this growth, almost like internet-like growth, which happened in the 90s, has happened with Ethereum, right, in the last 2 years. Also in the user base, right? Like if this is the number of users who are using these financial applications went from like 0 to 4 million. In fact, the recent numbers are closer to 20 million. So what was not being used 2 years back is now being used by 20 million users. So when when someone tells you that crypto has no usage, these are not people who are just buying the tokens. These are actually people who have wallets and they are actually using the products and services that are built on Ethereum. And that is one of the most powerful things, right? If people are just buying and selling tokens and just speculating in tokens, there are people like that. And that's the whole trader set and the investor set. But there are also equal number of users, just like Paytm has users, just like banks has users. Financial applications on Ethereum has users. And this chart that you see here is a reflection of that, which is gone from 0 to 4 million. And I think the recent number of people who have digital wallets and are using financial applications is close to 20 million. And that's one of the most powerful things where, this is essentially adoption, right? You don't have to, in many of these cases, these are young people who may not even go to a bank and may essentially just use financial services on Ethereum. And that's one of the most powerful concepts, which is why Ethereum obviously is one of the most interesting technologies. And obviously there are many such Ethereum-like technologies, which are, so when you talk about Solana, when you look at, other things like Avalanche and, other sort of multiple other tokens, they're essentially, they're like Ethereum, but kind of based on a very different technology. And one of the more interesting things, is not just about crypto, but also this idea of stable coins, right? So you would hear things like US dollar coin, US dollar tether, and all of these things, right? Now, these stable coins are actually crypto tokens, but their denomination is in US dollar, or their denomination is in the local currency, which means that when you actually invest in crypto and you want to get out of crypto and not be subjected to the volatility, you can sell your crypto for stable coins and yet stay within the crypto system, right? You don't have to just sell and go to your bank account. You can stay within the crypto system, not be subjected to the ups and downs, but park your money in stable coin. This is, again, it's gone from 0 to $125 billion globally. And as this kind of keeps growing, this is one of the most strong, is been one of the enabling technologies for crypto adoption, because people have the option of staying in stable crypto or volatile crypto, depending on what their risk preference is. Yeah, and obviously Ethereum also makes fees, right? Like, because it's a software network and there are miners or validators, like I explained for Bitcoin, the miners make daily average fees, and obviously the fees that the Ethereum network earns is far more than what the Bitcoin network earns. And which is why I said, right, as soon as you leave Bitcoin, you leave this area of cryptocurrency, you start getting into technology and you start getting into software and things like that. And this fees is a reflection of that, right? The miners are getting fees. And the miners obviously getting fees in Ethereum, right? Which is native token of the Ethereum network. So again, you need to separate out the Ethereum software or the Ethereum network, which is a global network, and the Ethereum token, which is nothing but a way of paying fees to the miners. And obviously, when people invest in Ethereum, they invest in the Ethereum token. But behind that token is that soft piece of global software that I'm telling you, which is where people are kind of building applications and building things. Like, you could think of Ethereum as, it's not Bangalore, it's not Silicon Valley, it's all of those startups, global, decentralized, sitting on one common technology, which is Ethereum. At the very simple terms, I would say that there are multiple layers of this technology. At the base layer is the blockchain or the Ethereum network. At the upper layers are, applications. So applications could be, as I said, lending, borrowing, deposits, derivatives, exchanges, NFTs, and I'll talk about NFTs in a bit. In a bit. And then obviously there are these front-end wallets, right, which is how you interact, right? Just like you use your browser, like your mobile browser or your internet browser to access the internet. In the case of crypto, you use a wallet or a digital wallet, which accesses all these apps. So you can go to any of these apps, connect your wallet, no user ID, no password. Your core, wallet has an address. That address is your identity. And that identity is then connected to any of these apps. And, one of the most interesting and the most, again, this one of the misnomers here is that, crypto is very challenging and a lot of security risk. Yeah, obviously any new technology has security risk, but there is this idea or this concept of a private key in crypto. One of the first things that you should remember is that you should never give your private key to anyone. Whoever has lost crypto has in some ways compromised and shared their private key with other people. And that obviously has happened through, phishing attempts. They'll ask you to press a link, somebody will fool you, somebody will try and talk to you, and so on and so forth. You should not, if you have not shared your private key with anyone, you will never lose your crypto in your digital wallet. But the powerful part of it is, you have to remember 1,000 passwords and 100 passwords, as you go from one app to the other in the normal world. In crypto, your wallet already has a public ID, which becomes your digital identity. And every time you go, any app will recognize you just from your public ID. And they don't have to know your private ID, because the private ID is your security, and that's what you feel. So when you start using these apps, you'll realize that it's a completely new evolved world. It's a much more advanced world where you have single sign-on across all the apps without any kind of user ID and password, because the digital identity is secure. And that's one of the most powerful aspects, at least for me, for crypto, in terms of how the checkout happens and how the payment processes happen and so on. So for now, obviously, this has implications in terms of how we will do future payments, how we will buy digital goods, how we will sell, how we will kind of interact with this digital world going forward. And I'll come to one of the interesting implications around that is around what are these NFTs and so on and so forth. Yeah, so this is essentially like as I was telling you, there are, just like how interest rates are determined in the real market, what is the borrowing rate and what's the lending rate. In the crypto money market also, there is a borrowing rate and a lending rate. And if you deposit, you can earn the lending rate. So you can take your stable coin and earn 5%, 10% on it, depending on the yield. Usually the crypto yields are much higher than the normal yield. So a lot of people find it very attractive, not to trade, but just to earn yield, right? And that's very powerful, right? If you earn 20%, 15% on a yearly basis, that's a lot of people find very attractive. Now, obviously, these are floating rates, so they keep changing. But again, one of the important, interesting use cases around yield and money market yields is happening in crypto. So what are NFTs, right? NFTs is a very, very interesting technology. So just like, Ethereum has tokens, like I was telling you, right? You can invest in these tokens, which are tokens representing these startups. NFTs are actually, they're called non-fungible tokens, or, the normal tokens that you invest are fungible tokens, because one Ethereum token is not different from the second Ethereum token or the third Ethereum token. They're all the same, right? So it doesn't matter which token you hold. Right? In non-fungible tokens, these are actually unique tokens, right? And they're unique because they represent something very unique, like, just something which is only, something which has got its own unique characteristics. And that technology has become very powerful to then own, or then being able to own digital media. Let me give you an example. And, this is not, I'm going to say Facebook, but this is not, this is not about hating on Facebook or anything of that sort. When you have your profile on Facebook, right, you have your profile picture there, you have your profile data there, and sometimes you post videos on YouTube, Instagram, you put music and so on and so forth, right? So when you share this media, right, when you're sharing, right, your picture is a media, the video that you're sharing is media, what you're writing on Twitter is media. When you share this media with everyone, right, that essentially becomes, you think it's your property, but actually it's the property of the network or the platform that you're posting on. And the reason I say it's a property of that is because you're not monetizing it, and you're not kind of, so any network or any platform can see what you're posting. If you post about shoes, they'll show you an advertisement on shoes. If you post about music, they'll start showing you, when you start browsing, they'll start showing you interesting things about music and so on and so forth. So there's a lot of reading and there's a lot of data parsing that's happening, right? They're reading you. And that core technology, if it was a situation where you own your own media through non-fungible tokens, you own your profile picture, and obviously, this funny pictures that you see of, apes and punks that, people are now posting on Twitter are essentially NFTs, which people own, and they feel like they want to share that and make that their profile picture. But essentially, you own your property, you own your own digital media, and that's the core technology behind Ethereum, behind NFTs. And also, let's see what are the other implications, right? So there are obviously so many YouTube creators and content creators. They obviously, in some cases, make money from YouTube or make money from Instagram. But the margins that these platforms make is in 90, very, very high margins, right? Versus what the core contributor or the core video creator gets. So instead of actually posting video on these centralized platforms, if you make an NFT of it and then share it with your fan base directly, you just have to probably give 3-4%, commissions to the marketplace, which enables buying and selling of these NFTs, but keep the majority of the upside yourself as the creative person, as the content creator, and so on and so forth. So NFT, we have left this world of finance. Now we are getting into the world of media. And NFT has very, very deep implications in terms of how the future of social media could be, how content will be created, how content economics will be shared between the content creator and the platform. And so far, I would say the advantage or the economics have been in favor of the platform. With NFT, the advantage will go back to the creator, will go back to the person who owns it. So, for example, I play certain games. And in my game, I have a digital identity, just like I was explaining to you why the wallet is like your digital identity, because it has a public ID. So that ID is owned by me, which is on the Ethereum platform or the Ethereum blockchain. So I use my ID to kind of log into a kind of a social game. I have my profile picture, which is also an NFT, which I own. And then I participate in that social game, right? I completing certain tasks and so on and so forth. And I make money from that. I probably make money in crypto. And obviously all that goes into my wallet. So when you start seeing this situation, one of the big things that changes is that you own your identity, you own your profile picture, you own the video you share, you own your experiences, and you get compensated directly from the platform and all of that. So just like we said, decentralized finance, now we are going towards decentralized media, decentralized social media, where no single entity controls you, no single entity is able to monetize you. And some people may not find it as irritating, but when you start thinking about it, how much these social platforms are using our data and making money, whereas you are just plainly contributing, and in fact you're becoming a social media addict, spending so much time on these platforms without getting any compensation back for your own data, then you will start appreciating the value of these NFTs and what this technology could do. And similarly, digital art, for example, just like there are physical artists, which are like if you have painters and who demonstrate their artwork in physical galleries, you have digital artists who now demonstrate their digital artwork in digital galleries on crypto, on using NFTs. So NFT has also enabled and empowered independent digital artists, whether they're photographers, they're video creators, they're graphic creators, to actually take their art and go directly to people. If you're a gamer or you're a gaming developer, it's almost impossible to launch a game without, paying 30% share to the platforms like, with your app stores, which actually help you distribute the games. But if you're a gaming developer, you can use NFTs and you can use the Ethereum software and build a game and take that game directly to the users. And the users can own the in-game assets. They can own the digital assets within the game. As a gaming developer, you can make full economics. You don't have to share this crazy economics with the platforms that help you distribute. So crypto has become like this distribution technology, and which is being able to go direct to the consumers, owning a greater share of the profit or the economics. And in a way, when you start looking at it this way, you'll realize that actually crypto is again not about currency. It's a empowering technology to empower creators, empower developers who actually have some skill, have some ideas, and have some innovation, which they can take directly to people without any middlemen. And that's the power of the technology. So when you hear a lot of opposition, remember that crypto is disrupting a lot of industries. Crypto is disrupting a lot of old ways of doing business, and that results in obviously natural, anxiety for people who feel disrupted. So when you look at gaming, a lot of existing games don't like NFTs because it feels like it will disrupt their existing models. So a lot of, as I said, right, headlines that you see are coming from a lot of vested interest, and that is something to be kept in mind when you actually start, digging into this space, because crypto is changing a lot of industries, and crypto is going to change the way technological startups, or how what the future of tech is going to be. I mean, are we going to be with centralized platforms, or are we going to be with decentralized platforms, and how fair will be those future platforms that we create? And that's, again, as I said, right, you have to remove that notion of a currency. You have to start thinking in terms of what crypto is, whether crypto is the future of technology or not, and whether new apps will be built using crypto decentralized networks, or will they still be built in the centralized ways that are being built today. Yeah, so this is one of the games that became very, very successful, again, using NFTs and things like that. Didn't go through Apple or Google or anything. It just went straight to the consumers in crypto and became like this massive game. It's now the 5th, 6th largest game in the world. So you're already seeing success. You're already seeing, interesting apps being built, which have seen, which are becoming as successful as some of the, previous versions which were not built on crypto. Yeah, and obviously there are marketplaces where you can buy and sell NFTs. They take a small 3-4% share of the revenue, but this is much less than what the centralized platforms take. I mean, centralized platforms take as high as 50, 60, 90% of the revenues, whereas the marketplaces, NFT marketplace, they take 3 to 4% versus what normally people end up paying without realizing that they're paying that kind of premium to these platforms. And obviously you've seen, Facebook rebrand itself as Meta. And this idea comes from what is called a metaverse. Again, I'll not dig deep into it, but the broad idea of a metaverse is nothing but like a virtual economy, where if you participate in that virtual economy, you are able to participate. It's kind of like an immersive experience where you're in a virtual world, and you're interacting with people, you're playing games. There are kind of local economies within that virtual universe, and you're owning that. You're owning your identity, you have your own digital avatar, you're owning digital property, and so on and so forth, right? So there is a lot of interesting things where this whole social media world could take this new form or new avatar called a metaverse, which is this kind of world of virtual experiences and virtual ownership and a virtual economy. And one of the enabling technologies for this is going to be how blockchain is going to be used for data, identity, property, and so on and so forth. So I'll leave it here without jumping too much into it. There are ways of asking questions. I don't know.
Yeah, sure, Gautam. First of all, thanks a ton for being, explaining this topic in a very lucid manner. Taking a liberty and saying that next time, whenever I'm going to introduce you, okay, in your profile, along with all your achievements, I will mention you're a wonderful teacher.
Thank you.
Yeah. Thanks for being so crisp. So one common question from all the participants that, to please share the, recording link of this. So definitely within till Tuesday or Wednesday, everyone will get the bullet points of this conversation along with the recording link via email. So quickly jumping to the Q&As. Mr. Nishant Poddar is asking, how will miners be rewarded once 21 million Bitcoins are generated? And Diflima shows that the total value lock if DeFi space is 240 billion. What's through the difference?
Oh, okay. Yeah. So let's answer the simple question. 240 billion is across Ethereum and other blockchain networks. So Ethereum is probably 125 or so. And then the other crypto networks combined is kind of 250. So DeFi Llama is right because it combines all the blockchain networks. And then I think Nishant's question is great, which is what happens to, what happens to Bitcoin. So Bitcoin has two ways of compensating the miners. One is actually to pay in Bitcoin, which is the miner fees, and the second is transaction fees. And I must also say that this 21 million is going to happen after a long time, and by that time we don't know what the price of Bitcoin will be because the way Bitcoin price has gone. So that's going to happen by 2140. None of us will be alive who are attending the webinars today. So what's going to happen is the revenue model is going to go towards more transaction fees. So there are two parts to it: miner rewards in terms of Bitcoin, and the second one is transaction fees. So it'll become a more transaction fees revenue model, just like you pay normal fees for using any network.
Mr. Anuj Gupta is asking, why are centralized banks are worrying with crypto markets and why do they want to ban it?
I mean, like I said, right, I'm as much as, I'm also a banking analyst and a fintech analyst, and I'm a crypto analyst. So I understand both these worlds very, very well. And I can tell you that if people start putting deposit money in crypto and they start earning interest on crypto itself is providing a banking service so we are not realizing that this 100 billion that, DeFi Llama number you saw, a large part of that is deposits. So obviously any new technology which cuts out the banks, where people are directly accessing financial services using smart contracts without any human intervention, it's very powerful, right? And to that extent, banks are worried. There are genuine concerns around money laundering and KYC and things like that. I think those need to be addressed by the crypto industry, and hopefully that should be addressed. I would also say that I will not be surprised that after a few years, banks, and that's probably happening in some countries like Singapore, where banks have realized the power of this technology and they're participating in the crypto, right? They're trying to figure out a way how they can actually provide crypto in a safe manner to their users. And the more banks are able to do that, I think that's a much smarter way of working with crypto because you can't stop it because it's like stopping the internet. So I think that's one perspective to be kept in mind.
There are a couple of questions which are related to direct currencies. So, we can't give a call on direct currencies or, any specific, but okay, this is a general question. When was Ethereum introduced?
Ask me, I'll answer appropriately.
Yeah. So when was Ethereum introduced and when was smart rules introduced in it? And can we say this metaverse is evolving?
Yeah, so Ethereum was probably introduced in 2014 or 15, I think much after Bitcoin. And metaverse obviously is a very early idea, right? It's not, I think metaverse is the future of social media. And so just like whether your social media today is a bit 2D, right? You just interact with it on a sort of a slightly more static basis. If this was all dynamic, right? Just like how Zoom, like today we are 280 people or 300 people on this virtual world. If this was a virtual world where we were, there was land and we were all standing on that land, and there was a stage and Amit was sitting on the stage, and maybe a few of us were on the stage and addressing the audience, and then there was an audience. So if you imagine this virtual world where the same interaction can happen virtually, maybe I have a cartoon character as my avatar, and Amit has a different cartoon character, which is all owned by NFTs. That is what we're talking about, right? Where I own my identity, I own my profile picture, and then this content that I'm creating today, right? What is happening today may become a video, and that video is an NFT. And if any of y'all are interested, maybe y'all can buy a piece of that NFT, and we can all share it between us. And that's how we create a new community, right? Without going through any of the centralized platforms. So this metaverse is this very new idea, right? Where combination of NFT, digital identity, content creation, virtual world, AI, artificial intelligence, virtual reality, augmented reality, all kind of combined together into this one single universe, which is called the metaverse. And crypto is an enabling technology for that. Anonymity that is available in cryptos has led to fear that being used by illegal activities like illegal. Yeah, so I think that is true. There is anonymity here. But I must also say that, crypto is an open source technology, which is, that blockchain is open source. So anyone can track your data. Whereas when it comes to banks and others, while banks can look at the data, it's not auditable by anyone. Whereas crypto, anyone can audit it. And there's a lot of blockchain level analysis that can be done to evaluate transactions and trace transactions. So a lot of new technology. In fact, the number of illegal transactions that used to happen in crypto 10 years back, maybe it used to be 10 to 12%. That's now come to a very small percentage, maybe like 2% or something. So I think somebody did this study sometime back. So as more and more analysis is being done on blockchain, in fact, blockchain is not one of the best places to do illegal transactions because it can be tracked and it can be traced. You can go to this website called Etherscan, and you can actually go see all the transactions on the blockchain. Any one of you, all of you all can go to Etherscan and check the transactions that are happening on Ethereum. So it's an open ledger. Anyone can see it. What is the state of equity investing in crypto in 50 years from now? I can't predict 50 years, man, if I was that good. Not all coins available on Vault and where to go for buying and participate in ICOs. Yeah, so I think you have to go to local exchanges. I think Indian government also prefers that you go to local exchanges. But if you go to Binance and FTX, you can get a lot more choice. If you go to Uniswap using your MetaMask wallet, you'll get a lot more choice. How do I ensure cryptocurrency which I purchase is genuine? Yeah, if you go to good exchanges like WazirX, you don't have to worry about that. No fake currency can enter the blockchain because the blockchain itself won't recognize it. So that's not a concern. But yeah, I mean, if you go and buy like the 10th dog coin, then, there's no guarantee that anything can happen. So be careful of like buying random coins. If you keep buying the listed coins, that are fine. How do I know CryptoBot is genuine? I answered that. Can you explain the process of if we want to introduce new NFT? Yeah, NFT can be created on Ethereum using a token called ERC720. I think WazirX has an NFT platform. You can also go to OpenSea.io, and that also is able to kind of create, you're able to create NFT in that context. There is no Indian context here. It's a global market. You can go to a global platform. If you want to market it to Indians, you can market it to Indians on Twitter. That's all local. RBI's digital currency is going to be like a digital rupee, which will be official digital currency of the RBI. It's going to be a bit different from the USD coin and other things that you're doing here. What's your view on crypto regulation in India? I can't predict the future. It looks like the government is being a bit more thoughtful about it instead versus trying to instantly ban it. And that is a positive sign. But in general, we can never know until we've seen the regulation. My general view on regulation, not just in India, is that over a period of time, governments will understand that this is a innovative technology that is empowering people. And they will realize that from a political standpoint, it is better to support the technology because so many people support crypto over a period of time, and that will make the overall tone a bit more positive from where it is today. Is there mutual fund in crypto? I think there's a lot of people are building it, but it's more at the global level. How can we choose best cryptocurrencies? Yeah, you have to study. You have to study for hours and hours, just like how you study stocks. You should study crypto and get into the details, read the white paper, go to the websites, follow the founders, get into Discord groups, understand the project fundamentals, and then buy crypto. Don't trade crypto. As those are not regulated, how can corruption in it be controlled? Yeah, it's an open blockchain, and that itself controls the corruption because everybody can audit it and trace it. Virtual crypto universe will deal with transparency or lack of it. Is there finite? No, are there finite number of Ethereum coins which can be mined? Yeah, I mean, Ethereum has an inflation schedule, which I think is 4 to 5% per year. It's not like Bitcoin, which is kind of deflationary in nature. What is the difference between public blockchain and private blockchain? Public blockchain are essentially, public, it's open and accessible to everyone. Private blockchains are restricted to a few parties. Public blockchains usually have tokens, private blockchains don't have tokens. Tokens are needed for incentivizing the blockchain. It becomes very unfeasible to run a private blockchain without tokens.
Next question is, do you think that NFTs can be used to buy and sell physical assets like, land, properties, cars, other than virtual assets in the coming time?
First use case will be virtual assets. There'll be virtual cars and virtual land and virtual digital real estate. Because what is happening is these NFTs are being used in games, right? So that virtual asset has some utility in that game. If you're able to, that's a completely different concept, right? Like your physical ownership on blockchain is a completely different concept. Whereas a virtual property on the virtual, NFT is a very different concept because it has programmability. That means that digital land has some utility in some game that you're playing, and that's where the value is coming from. You're making some rental income on it within the virtual universe. Whereas your physical property on crypto is interesting, but it's like a certificate, an ownership certificate. So unless you're able to program it, there is no utility to it. It's like, your government kind of offering it.
Okay. So generally your views on the taxation of the cryptos, though it has to be declared, but experts' view.
I mean,
assumption.
Government treats it like property. So if you make property gains on it, you should pay tax on it. You should declare all your gains on crypto.
Next question is, I'm an NRI. Would it make any difference in my returns if I invest from India or from the UK?
No, if you're an NRI, if you're in UK, you're not subjected to Indian regulation because you're subjected to the UK tax regulation. So you should follow the local taxation.
Mr. Anupam Gupta asked, there could be only
I'm not a tax expert, so don't consult me. I'm just giving a very
absolutely
broad,
right.
So don't take tax advice from you. Don't take investing advice from you.
Right. It is said that only few cryptos would survive, and on what basis, they will some survive. Important
just
three
like
parameters.
Few startups survive, few tokens survive. Yeah. It's very simple. Look at the returns on all tokens. Not all tokens give returns. So you have to find it. You have to do the fundamental work. You have to understand the project. You have to understand the depth of that project. You have to understand the team behind it, whether it's a genuine team which will continue building for the next 10 years. Just like you invest in stocks, right? You need to know whether the founder and the promoter will stick around for 10 years, 20 years or not. Same, whether the founder in crypto will stick around or not. Whether the team that's building it, is it committed to the journey or not? If it's a random team which wants to make quick money and exit, then you'll see tokens which go up 100x and then come down 90%. And if you enter into those, it's going to be challenging.
Sure. For the paucity of time, we'll take next 2 or 3 questions.
Sure.
Okay. I mean, precautions for retail investors while investing in crypto.
Only precaution is yourself. You study. You're supposed to study.
Right.
There is here, going to government and say, it's impossible. It's such a wild technology. It's almost impossible for governments to monitor and regulate this. Because a code can be written in a few minutes and put on the Ethereum network. What can anyone do? Unless you close down the internet network, then you can't access the Ethereum network. So protection obviously is more your study, your fundamental understanding. And then yes, AML, KYC, all these things that the banking side checks and balances should be followed and applied to crypto exchanges also. Just like how banks are subjected to money laundering, terrorism financing norms, same thing should be applied to crypto exchanges also. There should be no difference.
Sure. Could you please suggest sources to start research on cryptos? I mean, any good websites or the application for the retail investors?
So DeFi, Twitter is a great source if you're in crypto. So if you just follow the right people on Twitter, you will understand all the sources. But you can go to many websites. Binance has an academy, online academy where you can start studying if you want to start from basics. You can also, Coinbase has a lot of resources, learning resources. So all the exchanges have learning resources. You can go to these websites, DeFi Pulse, DeFi Llama if you want to search about DeFi. Coin market cap, CoinGecko for all the market caps and so on and so forth. Yeah, I mean, also go to the source material, right? Go to the websites of each of the tokens that you're researching and read the white paper, read the Bitcoin white paper, right? Read the Ethereum white paper, all of those things.
Sure. So Gautam, thank you so much for this interaction. I mean, there is a common question that, ABSL has any strategy to launch this NFO. As of now, no, there is no any NFO product which is related to crypto. But definitely, I think, let me thank Gautam once again for your valuable time, all the valuable insights. Session, I mean, in the chat box, I'm sure you can also witness, I think people are really appreciating whatever the value advice or, this value additions you have imparted to everyone. And thank you so much to everyone, for joining on the Saturday call. So please, block your third Saturday of every month, 11 to 12 o'clock. There is going to be, knowledge-oriented session from this Niveshako Samvaad, and definitely we will see you in the next session. And once again, thanks Gautam for all the time and all the insights. So thanking you once again.
Thanks for joining. Do your own
Thank you.
research. Don't listen to third parties on crypto.
Yeah, thanks. Bye.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
म्यूचुअल फंड निवेश बाजार के जोखिमों के अधीन है। स्कीम संबंधी सभी दस्तावेजों को ध्यान से पढ़ें।